interview.
I forget it's St. Patrick's Day. Well, hello. Good point, Austin. It is St. Patrick's Day. Happy St. Patrick's Day, everyone. And here I am with no green on. Oh, no. So, hey, thank you all for joining again. Manning the Grill, episode 9, my 52 episode chat about stuff, sponsored by Dream Lane Real Estate, RE/MAX Preferred. What I wanted to do St. Patrick's Day, I didn't even think about that. It's so funny. I literally completely lost the fact that it was St. Patrick's Day on me. I was completely lost in my mind today. What I was going to do today, we're still going to do, we're going to take a second and talk about the most important part of the real estate portion. I haven't talked about real estate a lot with this. In 9 episodes, I don't think I've actually talked about real estate at all. It's been other stuff, Black History Month, leukemia, lymphoma. We're going to actually take a second and talk about real estate. And the most important part of real estate being, how are you going to pay for that sucker, right? And I'm assuming, since I think the actual stats are like 3% of buyers actually buy with cash, 97% of you are going to relate to this conversation at one time or another in your life. And my platform is always about investing. And so your house is always in my opinion, most of you, your house is always the largest part of your financial portfolio. And it's also the easiest piece to grow, right? It just naturally grows on its own. Equity right now is through the roof. The scripts that we all say, never been a better time to sell your house, et cetera, et cetera. So I've always been a huge proponent of buying a house as a foundation of your financial portfolio. In my world, naturally, what I normally do as the buyer process at Dream Lane Real Estate, we come in, I'll just back you up a second. Hey, Lane, want to buy a house? Sure, let's meet. I still push for the in-person, but generally that's been very much like this, Zoom calls, which we're all getting very comfortable with, but we've got that down. It's totally fine. We go through the thing, name, address, phone number, email, blah, blah, blah. What are you looking for? Blah, blah, blah. And it always comes down to this question that every buyer's agent or anyone buying on behalf of the client asks. What's your budget? What's your ceiling? What's your basement? Let's try to get somewhere in the middle. And my favorite answer, I'm surprised in this day and age how much I get this answer. Well, according to my calculations, I should be able to afford a $320,000 house with X amount down, blah, 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 blah. And my next question automatically is, have you talked to a lender? And who are they? Well, no, we're going to do that when we get the offer accepted. And I got to break it down like, no, bro. It does not work that way. So I asked a couple of my colleagues, and this can be a whole nother conversation, but there's no reason you need to not get money locally. There's no reason not to get local money, right? Madison is full of phenomenal local lenders. I happen to have 2 on the call today, Austin and Lee. I'm going to let them introduce themselves when they talk, but there's no reason you shouldn't get local money, because I really like to have a person I can go strangle if something goes down, or just simply call and have them explain things to me, right? So we'll save that for another day, but there's absolutely no reason you shouldn't have that conversation early and know exactly what you're doing and go into that. We'll talk about that a little bit later, but Austin, we've talked about this often in our networking group. We've talked about this often. Mm-hmm. What would you answer that question to a potential buyer when they say, "Oh, I've done my calculations," and I introduce them to you? What would your first response be?
Yeah, first response would just be, "That's great. Let's confirm that," because one, either they've done their due diligence and they're right, and that's awesome, or we catch something that they didn't take into consideration, whether that be they totally forgot that there's closing costs that they have to consider. Or yes. A big one is the fact student loans, maybe they're not paying on it for 10 months or so they're not taking into the fact that they're going to have $400 monthly payment for something that's going to start within a year. But those are all things that we got to take into consideration as a lender, and making sure somebody qualifies for a mortgage. And then just other things that come up too that people don't know about until they get their credit pulled or something, a collection that came from something, moved out of their college house and forgot to take the bill out of their name, and We Energies has a collection in their name. So just things like that where you don't even know. It's just good to do that due diligence ahead of time before you start making offers, versus getting that offer and then talking to a lender and having to deal with it at that point.
Well, I hope no one would actually do that. I'm pretty sure in this case,
no.
Would actually write an offer without a pre-approval, or at least knowing you've talked to someone, right? How about you, Lee? What do you think?
I agree.
To piggyback off of Austin, you never know what's on your credit report. I've seen things as library books that have been checked out that have not been returned, and there's like a $3 charge. That's a collection that's negatively affecting your credit report.
Oh, totally.
So, yeah, talking with a lender ahead of time is imperative if you want to buy a home in this market. Because the other thing, not just the total amount that you can get, that you qualify for, so like your ceiling of 350, it's also talking about what is that monthly budget that is comfortable for you. I know so many times we as lenders can pre-approve somebody up to a very high limit because they have space within their debt to income, but where they want to be for their monthly budget payment is much lower. So you don't want to set false expectations for somebody when going through that process. And if you just go and do something online willy-nilly and don't talk with somebody, you're not getting all of those specific questions answered. So you may be shopping for a house that you qualify for, but is not right for you for your current situation. So that's just another thing that I think is super important for everyone to go through and just at least have the conversation, because one of my favorite things to say is you don't know what you don't know. And if you, depending on how much you're putting down, if you are escrowing taxes, if you're escrowing insurance, if you're buying a condo and have homeowners or the homeowners association dues, all of those things add up and can throw your monthly payment way out of line from what you were thinking.
You're right. All those do-it-yourself kind of things, they generally never consider taxes. And our taxes, especially in Madison proper, I'd actually say Madison proper and all the surrounding touching communities, are generally a little higher than normal. It drops considerably when you get out to Columbia County, Rock County, et cetera. But our taxes are so high enough, they're generally half the payment or sometimes even more than the payment. And you have to consider that because that, 40, 50% more that you have to adjust that you can't amortize. That's just your tax. That's just what it costs, right? So that said, people out there going on their own, doing it, that's a perfect segue. One of the things I love about, I'm going to try to share my screen here. Tell them how easy it actually is, because I'm assuming they're afraid of this, right? And my whole point is if you're going to get on Zillow, Redfin, all those third parties, they're going to ask me for an app to look at your phone. How easy is it to apply for a loan just via a mobile app?
I mean, it's as easy as picking up your phone, going to a computer, sitting down, opening up Austin or my websites and hitting apply now. The application process has become so streamlined these days that it is so intuitive. Even if you're not tech friendly, you can still get through the process very easy and walk through all of the different ins and outs. Because there's so many different variants that go into the application process that, if you're a veteran or if you're a first-time home buyer, it'll take you down those avenues, ask you those specific questions, and you can even do it from your phone. Sometimes it takes 20 minutes or less. I mean, I had somebody just the other night do an application, and I get a notification when they start it and a notification when they end it. Literally, it was 5 minutes. I'm like, okay, that's like a new record for me. So I don't know, Austin, what do you see on your end?
Yeah, no, I 100% agree. And the important thing too to realize is when you're filling out one of those online applications, we're not holding you to that information of, okay, you have to put down $50,000, like you said, on your application. It's really just to get the process started and, have a place to work from. And then from there, we can adjust it however we need to. Like Lee said, are you a first-time home buyer? Okay, maybe there's.
What?
Did we lose him? Well, yeah, as Austin was saying, there's programs for first-time home buyers.
There you go.
Sorry about that, guys. Yeah, well, like I was saying, first-time home buyers, veterans are a big one, and then even the area that you're purchasing in, there's different, like a USDA loan that becomes available, and it's helpful to talk to a lender again, where if somebody's like, oh, I want to stay within 20 minutes of Madison. I was like, well, maybe if I bump it out an extra 10, 15 minutes, I could get 100% financing through a USDA loan. But yeah, the application process is just a way to get that started. So we can figure out, okay, here's some things that can help this person either purchase a home sooner, bigger home than they thought that they could get, or you just get them more bang for their buck one way or another. Just address things from the beginning and start from somewhere. And the applications are so easy. They put the wording in simple to understand terms versus a lot of the lender jargon you might see when you're actually at a closing table signing a bunch of documents. It's much easier going through it online.
Yeah, it's gotten so much smoother. All right, so on that note, talk a little bit about, Lee, you can start pre-auth, pre-qual, pre-auth, pre-underwritten. When they apply this, they do the simple stuff. They actually take our advice, and they actually hit apply now, fill out some quick information, get in contact. Because sometimes that's enough for me, right? If I know, especially if I know the lender, if it's anyone I'm familiar with, Growls, you guys, Dawn, Iric, whoever, I'm like, cool. We can move forward from here because I know who that person is. If you made contact and I have a confirmation email, like, all right, cool, let's start this moving. I'll get in touch with them. I'll push a little bit. But what happens then? What's the difference? What are they looking for? What would be the agents? What do you guys typically provide the agents for that buyer before they go to that first showing? Why don't we start with you, Lee? Let me know how your process works.
Let's answer the first question that you asked about the 6 in that statement right there, which is good. Difference between a pre-qual and a pre-approval. Essentially, a pre-qualification is an estimate of what the lender thinks they may be able to give to you for an amount. A pre-approval is actually a set amount based on information that is retrieved, specifically documents, your credit score, and your income, work history, assets. So we actually calculate all of that to come up with an exact amount that we know that we can get you pre-approved for based on that scenario. So it's an estimate compared to an actual hard number. Then the pre-underwritten means we take that one step.
You still there?
No.
Am I still here?
Yeah.
Oh, I hear him. That's why
I lost you, Lane, and then I was like,
So I apologize. My wife went and got her COVID shot today.
Yeah.
So she's at work all day, and I'm at home, not in my studio, at home. And I know someone's streaming on their classroom up here, and someone's streaming their classroom over there. So my internet might be a little dirty or sporadic. So I apologize, guys.
No, you're fine. You're fine. It's technology. It's what we live by right now.
Right.
Yeah, just to finish that piece up, if you guys didn't read, the pre-underwritten means that we actually send it through an underwriter. They evaluate everything, and so then we can get a new pre-approval that's fully underwritten. So you can take that to your buyer or to your agent. So when you're writing an offer, you can say, hey, all we need to do is get an appraisal if it's needed, get title work and insurance, and we're good to go to close. So there's 3 different steps in there. Normally we fall on step 2. Step 3 we can do as well, but sometimes that's a little bit more legwork on the borrower side.
Totally. That makes a lot of sense. And in this market, in certain price points, it's vital because you're competing. Any edge your agent can use. I mean, I know I've called you guys like, hey, can I say this? This is risky, but can I say this and just leave the appraisal in? And that should give a clue to the other side what we're doing, right? And then I've also asked you guys to follow up with a call, just kind of give them that little. Every bullet in our gun sometimes, right? I wrote an offer on one this week. I had 29 offers. And my buyers actually knew the seller. I'm like, it don't matter, man. It don't matter if you are a family. I'm telling you, they're gonna get some crazy number, and we're gonna have to, step it up. So get your pre-approval, get it ready. Austin, give me a little, I was just talking to someone about a USDA loan, and I had to explain to them what the USDA loan, we're in Portage. That's the USDA territory, I know that. But real quick, give me a little education on the USD versus WIDA versus Fannie and Freddie, like the different options. The reason we want to talk to you is because there are different options that people may not know about. Like I know Portage is USDA and I know the benefits of a USDA loan, but a lot of those people might not. And I think it's important because we're finding people to fit their budget. I'm in Portage. I generally haven't gone as far north as Portage for buyers, especially, right? But I'm finding myself doing that. I'm going to Janesville. I'm going, to Lake Mills because that's where they can find affordable property. I think it's very important that they know the different types of loans out there. The reason to talk to you is because there's different options with different rates, et cetera, et cetera, et cetera. Would you talk a little bit about that?
Yeah, absolutely. So USDA loan is basically a government kind of loan that focuses more on homes in rural areas. So right here in Madison and Dane County, you're not going to be able to get a USDA loan. If you go out to Portage, definitely qualifies for that. And there's maps that you can look up online. If you just type in USDA eligibility, it'll be one of the first thing that pops up on Google. But it allows for 100% financing, and government basically wants to try and promote home ownership everywhere. They don't just want it to be in these metropolitan areas. They want to promote it everywhere, including in rural areas. So that's why they allow for 100% financing to help people get into homes that might not have been able to, save up at this time or that kind of thing. So it's just to help promote that, but it's a great program for people that qualify for it simply based off of where they're purchasing their home.
100% financing. So what? What does that mean? Because I'm a buyer, right? So I don't have to put any money down.
No money down for a down payment, and then there's ways that I'm sure to structure the actual contract where maybe they bump up the selling price a little bit, and then the seller gives the seller credit to cover some of the closing costs for them.
So in theory, they can buy a house with no money out of their pocket.
Yeah,
almost easier than buying a lease. No security deposit. You just literally get into a house and pay a better rate. Interesting. Yeah. And they can find that out from talking to a mortgage lender. Wow.
Exactly. Something they might have never even would have known was an option.
Right. So, and the next one, WIDA, the Fannie Mae, what's the difference between those, and how does that down payment system work? And either one of you can take that question.
Yeah. So, WIDA is more of like a localized Wisconsin housing that, promotes housing in Wisconsin. They've got different grants, different programs that also allow for a form of 100% financing. And, whether that's in the form of a second loan or grant, something like that. But again, reduces the need of people bringing money to closing. Fannie and Freddie, those are just two government-sponsored entities that own 90% of the conventional mortgages in the United States. So they're the ones that buy it. And when you hear people talking about buying mortgage bonds, that kind of thing, mortgage-backed securities, that's because Fannie and Freddie have pooled all these mortgages together and sell them on the stock market.
Yeah. So
one thing that I would just piggyback off of that, what Austin said, because was great information, is some of those programs do have income qualifications where you need to have or be below a certain level of income to qualify for those products. So just because, if you make $200,000 a year, you're probably not going to qualify. So there's other programs that we can work with you on that. But that's why it's so important to talk with the lender to make sure that you are exploring all the options that are the benefit for you. And, it all goes to like the location you're looking, it goes to where your income is, everything.
Family size, everything. Yeah. It's all different and very important. Like Lee said, talk to a lender because they know more of the weeds to it. And these are not things that are promoted just like anywhere and everywhere. If you're looking in the right places, you'll see it. But for the average person, they're not going to have any idea what WIDA is.
Yeah.
Right.
They constantly change. So, we don't expect the buyer or the consumer to be on top of all these different changes that happen. That's again why we're here. One thing that did change, I know it was going to be on our list here, was the conforming loan limit. So how much that you can actually borrow to do a Fannie or Freddie loan without, with a cap, without having to go up to the jumbo loan level. So that moved from about 510,000 to 548,250. So went a pretty big jump from 2020 to 2021, which allows some people who may have been in a jumbo product now can refinance into a conventional, or if they want, they can pay down their purchase price a little bit to get into a conforming limit, conforming loan, under that limit, which may be a little bit more advantageous compared to going into a jumbo product.
So what you just said there basically is the same thing. So the first 19 minutes of our conversation was kind of focused at the 315 under, the beginners, the getting in the markets, right? The whole conforming loan thing, you just basically proved a point for the people on the other side, the $7,000, $8,000, $9,000 home owners who are driving their equity down. There's probably a better way potentially a better way for them to save some money, get a different rate, et cetera, et cetera. Either way, both sides of the spectrum should have a lender, a good relationship with a lender, and talk to them once in a while. There's absolutely nothing wrong with having that conversation, right?
No,
thanks, guys.
so
I'm going to share. Doesn't cost you a thing.
No.
I'm going to share one of my stories, and the last couple of minutes here, I want to talk about self-employed people, privately employed people, right? W-9 employee versus a W-2 employee. And I'll share a story. I've done deals with Lee in the past. I just did my home, the one we're in right now, the world headquarters of Dreamland Real Estate, last November. And Austin is I know Austin because I started a networking group like four or 5 years ago. And Austin was the second winner that came. The first girl came and someone invited Austin. He's been there ever since. So I'm just, every other Thursday, we meet Austin, we talk, shoot game, whatever. I started at my house 2 years ago because I'm in my 5th year of real estate and I knew it was going to be wonky. Every year was generally going up, but I knew it would be wonky with a self-employed employee. That's the lesson there, right? I started early. It took me 2 years to get myself, we had plenty of cash, but it took me 2 years to get my credit and all the other nuances that they needed in place to get me a loan done. Austin, talk about that for a little bit, and Lee, say that too, right? The difference in getting a loan for a person who's got a normal W-2 from an employee versus the guy who's going to get 1099s, and how challenging that may be, but the things they can do to prepare themselves better.
Yeah, I mean, like you said, you were prepared. You kind of know the deal of how it works. But when you're self-employed, there has to be a 2-year history there, and there's different kinds of averages and calculations for how it works. But one thing that a lot of self-employed people do is they want to hide their income so they have a lesser tax burden.
Yes.
But if you're planning on buying a home in the near future, that's going to hurt you, because what you're hiding from Uncle Sam, you're also hiding from someone like me. So, the less income that you're showing for, again, Uncle Sam and having to pay taxes, that's less income that we're able to use for you to be able to afford your house.
Right.
So having, there's a right balance there. If you know or think you're going to be buying a home again in the near future, maybe don't have your CPA hide your money as much. So that's something to take into consideration, because it's not one of those things where I've had a great last 6 months, I think I'm going to be able to afford this house. There's a 2-year history of looking at it, and reason being, things cycle through and businesses come and go and run a little bit differently year to year. So that's something that you want to take into consideration and just think about, because self-employed, it's definitely different that way versus somebody that has W-2 salary, same paycheck every 2 weeks, month to month, whatever it is.
Mm-hmm.
Exactly. I mean, the other thing that I'll throw in there is somebody who's gets commission, gets bonuses. Those all have to be averaged as well. Somebody who's part-time, that has to be averaged. So it's kind of a puzzle that we have to put together based on your situation. So that's why I think in Lane's case, he did the right thing and said, all right, we want to buy a house in the future. What do we need to do to get ourselves into that position to start? So it's never too early to talk with a lender, to evaluate your situation, to talk about what is it going to take, both credit, income, assets, all of that. So then and you understand how you can be successful when you are ready to buy that house that you find. Some people, it can be a matter of days. Some people, it's the matter of years. It all depends.
Mm-hmm. Everyone's different.
Oh man, yeah, am I back?
You're back.
Yeah, luckily we had my wife's income, but yeah, we took it in the shorts tax wise for a couple of years just to make sure that we were ready to do this. Right, I reported it all. So, and again, a CPA, another invaluable thing for that W or 1099 guy. Just navigating through the ever changing tax rolls. So I'm kind of curious what's going to happen with all these PPP money and how that's going to eventually shake out next tax cycle, right? And who got forgiven, and what size, and leadership change, et cetera, et cetera. So it's definitely a crazy world.
Certainly glad I'm not one of them. They're going to have an interesting couple of years ahead of them for sure.
Right. So in closing, what would you say, Lee? I'm sorry. No, you go.
I was going to say, kind of going off of that, and this could take us on a tangent, which we don't have to. But I said, one thing with this market that we all have to be leery of is all the people that are currently in forbearance. So if you have your loan in forbearance, start doing some research now, because you missed payments for so long. You want to talk with your servicer. You want to figure out what's going on. How do you make up for those payments? What is going to be their requirements to make sure that you can still afford your home payment when you have to start making your payments again? Because most likely your monthly payment very likely could be adjusted to help collect on the payments from that you were in forbearance for.
Sure. So it's like you pay at the butt end of your loan to take care of a couple payments up front that you might not be able to make. You push that payment to
potentially, depends on the servicer, what the servicer decides. They may say, okay, we're going to amortize that over a 5-year basis starting now because they want their money back. Or they may say, oh, we're going to back end it. There's still a lot of unknown in what everybody's going to do.
Explain forbearance real quick.
So forbearance is the government gave the ability to tell Fannie and Freddie and all the different lenders to say, okay, because of the crisis that was going on, the hardship that people had, you can essentially pause and not make your monthly payment and go into forbearance. People think of, when people hear forbearance, they think more of student loans. So it kind of works the same way. You're not required to make that payment until your forbearance period ends. And then it's all calculated after that and how it's going to be disseminated. But essentially, it's because of a hardship, you are taking a pause in making your payments. Now, with COVID, you had the ability to elect to do that or not. There's a lot of people who didn't need to that did elect to take forbearance. So those, I mean, you just have to be really educated right now to make sure you're setting yourself up for success, because the latest that I heard was forbearance may be ending at the end of July. I don't know if that got kicked out with the new stimulus package to September, but I'm not 100% sure.
Yeah, I think Fannie Mae and Freddie Mac said that September 1st they were like that was the end of their allowing that to happen, and things will go back to normal. So like Lee said, talk to your servicer and see what you can expect, or let them know, because some of them will work with you in different ways of what's going to be the best way to pay it back. I'm not promising exactly what it'll be, but there's different ways to go about it. But it's easier to take care of it now versus getting that first bill in September and going, oh, this is not what I was expecting to owe.
Yeah, so that is how it could happen, right? If they don't do it, they don't take care of it, they don't make a proactive step, they could get a back payment for everything they owed to that point in the loan, correct?
Yeah, and then
that's gonna be tough.
Yeah, and I as a loan officer, they don't really let us know the details. I know here at Wintrust, I'm not sure about you, Lee. They didn't really let loan officers take care of any of the forbearance stuff or help structure new payments or anything. We had a very specific team for that. And I think it's kind of a federal thing. They don't want loan officers to work anything with that. So there's departments at every servicer that are handling that kind of thing. And if you're in forbearance, it's totally worth looking into now just to see what to expect, so you can make sure you have your ducks in a row.
Exactly. I'm assuming they educated you on that when you got into forbearance. I'm hoping someone educated you on that, because that's crazy. I get it. You got to do what you got to do. We've all been there, right? But man, that would keep me up more at night than just a big house payment, right?
Yeah. I mean, at the time, nobody really knew. They were just told, hey, you guys we're allowing you to put a stop on mortgage payments. You don't, people aren't going to have to pay them. You don't have to force collections on them, that kind of thing. And there wasn't really a game plan. As with much of with COVID, the PPP loans that were going out, they just kind of gave out the money and didn't have any idea how they were going to pay them back or anything. And it's still certainly up in the air a little bit too. And it's it's just, one of those things where everybody's rolling with the punches, trying to figure it out as it goes, government included.
Exactly. And if you think about it, going all the way back, by the time that this comes out of forbearance, it could be 18 months for some people for not making their mortgage payment. That's a lot of months worth of payment. Think about it. If you have an average of, a $1,000 mortgage payment, which who has that? That's $18,000
plus interest.
Mm-hmm.
That's how you make your money. So
they gotta
cool,
get
guys.
now.
Right. Cool, guys. Thank you so much for your time. In closing, got your links. Put both your links down there. Put Lee's quote. You don't know what you don't know in the comments section. In closing, is there anything you would add just to, and again, either or, people getting into the house buying game or people who've already been seasoned and might benefit from that non-conforming loan limit? Anything you guys want to add in closing? Does that cut us out?
Talk to your lender. It doesn't hurt to have a conversation. It doesn't cost you anything. And, knowledge is power.
Exactly. And to echo that and to add on, I would say it's never too early to talk to a lender because, like we all said, you don't know what you don't know.
Yeah.
And so you gotta educate. And that's why we love our jobs.
I'm putting Austin's quote on there. I'm literally not going to spell Muehlschlegel because I can't spell that name twice in a row without seeing it. Talk to your lender, knowledge is power. Cool, guys. I appreciate your time. Really appreciate your input. Thank you so much. I look forward to doing deals with both of you in the future soon.
Yeah, thank you. This was a lot of fun.
Thank you. Thank you.
Cool. We are out. Bye-bye, everybody. Bye-bye, everybody.